Welcome everyone. We have an exciting discussion ahead of us and looking forward to hearing from our panelists today. Without further ado, I'll go ahead and kick things off. I'm Stewart Pond. I am a principal here at Cota, where I focus on our fintech investments. And today we'll be talking a little bit about payments and exploring kind of the future of how we see payments evolving. So we have an exciting group of panelists from Bill.com, Token, and Citcon. And before I give them a chance to introduce themselves, I want to share a little bit about our firm and this event. So Cota Capital is a multi-stage investment firm where we focus and invest in public and private companies. And our Cota Access events are intended to bring together founders, thought leaders, and leading executives to explore a variety of trends that impact our respective views on the markets and how they're evolving. And today's topic will be thinking about the future of payments and how payments are continuing to evolve. So just some quick context on the payments market. It's a roughly $34 trillion volume market in the US. And the B2B payments market is about 2.5 times that of B2C. And the methods by which we pay, still are somewhat bifurcated. So businesses are largely paying by check and cash. And then for US consumers, we're most accustomed and acquainted to using cards. And while there have been a number of advancements in recent years with consumer payments, some of us are now, post-COVID more accustomed to paying with Apple Pay, and some parts of the world using super apps. But in the US, we're still mostly relying on cards. And then, comparatively, businesses are still using, despite the larger scale of payments volume for businesses, still relying on methods that were developed decades ago. And then lastly, kind of taking a view outside of the US, more globally, e-commerce payments, surprisingly to many, about 80% are reliant on non-card-based schemes. So these vary by region, but it's everything from bank transfers to and mobile wallets, and then other type of alternative payment methods that have emerged in recent years. So with that in mind, I wanted to go ahead and give our audience or our panelists a chance to introduce themselves. First up, we have Raj Aji. He is General Counsel and Chief Compliance Officer at Bill.com. Raj, if you would go ahead and quickly introduce yourself.
Thanks, Stuart. So I'm Raj Aji. I'm the General Counsel, Chief Compliance Officer at Bill.com. We are a publicly traded company. We are a one-stop shop for financial operations for small and medium-sized businesses. What that means is we enable businesses to make payments to their vendors and get paid by their customers, and also manage their spending and budgets. On an annualized basis, just for size, on an annualized basis, we move over $200 billion between businesses, and we do that through credit cards, debit cards, checks, ACH, and international wires. That's who we are.
Great, thank you, Raj. Next up, we have Todd Clyde. He's CEO at Token. Todd, if you would go ahead and introduce yourself.
Sure, thank you, Stuart, and thanks for the opportunity to join this panel. So hello, everyone. My name is Todd Clyde. I'm the CEO of Token. As you can tell from my accent, I am an American. I'm from the San Francisco Bay Area, but I moved to London about 4 years ago for this really incredible opportunity in open banking, and specifically in open banking payments. So despite the name Token, we have nothing to do with cryptocurrencies. Instead, Token's an open banking payments platform, and our mission is basically to replace the use of traditional payment methods like cards and wallets with account-to-account payments. And if you're not clear what we mean by account-to-account payments, these are bank transfers. These are payments that settle over national clearing systems. So we're basically trying to make a bank transfer simpler to use as a payment type than using a card or a wallet. Token, we don't sell directly to merchants. We do sell to existing payment service providers, gateways, and acquirers. And we're basically powering this payment capability for some of the largest acquirers, gateways, card networks, and tier 1 banks in the world.
Great, thank you, Todd. And lastly, we have Chuck Huang, the founder and CEO at Citcon.
Thanks, Stewart. For Citcon, what we have trying to build is a payment infrastructure for the merchant and client to accept mobile wallets and alternative payments. As we have seen in a few slides before, and the worldwide trend about the consumer payment landscape has been changed significantly in the last couple of years. That trend continue is a diversification of the consumer payment choice from just traditional card-based payment to a lot of mobile wallets. And worldwide, if you look at the PayPal, Venmo, Square Cash, or Alipay, WeChat Pay, there are billions of active consumers instead of use card to make payment, but to use a consumer's mobile wallet, the software-based wallet to make payments. And but on the what Citcon is trying to solve is build a single API to enable the merchant to accept those kind of wallets and alternative payments. So we have been founded about 6 years ago, and we grow rapidly. We serve help a lot of merchants to expand their payment infrastructure to accept those kind of capabilities, and we have been growing rapidly. Currently, we are based in headquarters in San Francisco. We have about 200 people worldwide, and continue to double our business year over year.
Great, thanks, Chuck. And we Cota are very pleased to have invested and have Citcon as a portfolio company of ours. And you'll hear in some of these introductions that we have an interesting perspective, both in the U.S. On the consumer and the business side, as well as globally. Getting different perspectives on how these pieces of technology that these respective companies are building are shaping these habits. So, Chuck, I think, kind of building on some of what you touched on in your introduction, I'll start with you with the first prompt, which is, what's different now in how we're interacting with payments, and what changes are you observing in consumer habits, or maybe in your own life? What are some of the trends that you're observing that's impacting Citcon?
Yeah, so there are two trends we have experienced in the last decades or so. Number one is mobile, and mobile changed the consumer's payment behavior fundamentally. Probably more so outside of the U.S. As I just mentioned, more and more consumers using the software-based mobile payment to make a purchase, like Alipay, WeChat Pay, like a super app, or GrabPay or Paytm. Those kind of wallet is different from traditional, like a US, like Apple Pay or Google Pay, because those kind of wallets are software-based, hardware agnostic. Normally, they don't have a bank account or credit account associated with those kind of wallets. So that require, when they use those kind of wallets, that require the merchants' payment infrastructure to make some change, because most of the payment merchants' payment infrastructure still rely on traditional card-based rails, but there is no card number for that wallet. Then there's a fundamental infrastructure needs to be built. So Citcon provided the API to solve that problem. So that's number one. And then number two, the trend change, what we have seen is a lot of merchants in the last 5 years or so expand globally very rapidly, right? Like you launch a website in the US, you probably quickly, just after a couple of quarters, you see your traffic will come in not only just from the US, North America, quickly from around the world. So even for like a medium-sized merchant, like processing $50 million or $100 million of merchant goods for e-commerce, their consumer can come in from outside of the US, significant portion of them, from Asia Pacific, from Latin America, in that case, your payment infrastructure needs to support not only just traditional card-based payment, but also to support like I just talked about, the Apex, both like software-based payment. So that's kind of the two trends that we have seen.
Yeah, that's great. And what I heard from you is that smartphones and newer financial technology are providing that financial access that maybe consumers outside of the U.S. might not have previously had, and are transacting in a new way.
Yeah, absolutely. I mean, you can see that the diversification actually also getting accelerated. Even like a buy now, pay later, they are mobile-based or crypto wallets. Just diversification of the traditional card-based payment is this trend is just continue to accelerate. Yeah,
that's great. Thanks, Chuck.
Sure.
Todd, you're in the European market, and you touched a little bit on regulation. What are you seeing in European consumers and some of the habits and trends that are evolving?
Good. Well, to answer kind of your question, your first question as well, which is what's changing the payments landscape. So in Europe, cards and wallets still dominate as a form of payments, and merchants have been willing to pay the high cost associated with accepting those forms of payments because they've really had the best conversion rates and the best reach of any form of payment. But there's really been two dramatic changes, much like Chuck had two as well. And these are changes in the national payments infrastructure. So I'm talking about the domestic clearing systems, the interbank clearing systems. So the two major changes that have happened there is first, these national clearing systems are being upgraded to real time. That's happening around the world. So even in the US, there's a real-time payments initiative. They're called real-time payments, faster payments, instant payments. They're now happening everywhere. And so in addition to upgrading these infrastructures that settle money between banks, there's also on-ramps being built to these infrastructures. So the second big change is that these national clearing systems are becoming more accessible through APIs, which now allow you to embed a bank transfer in the flow of commerce. So these two trends are what is really going to propel account-to-account payments from a niche alternative payment method really into the mainstream to become a mainstream form of payment. And then Stewart, getting to your last question. So, what are the benefits here? So certainly gives a lower cost of payment. It could reach anyone with a bank account, and the conversion rates are equal to or better than a card. So obviously those are really motivations that are causing merchants to drive adoption.
Great. And Raj, as you prefaced in your intro, Bill.com is serving B2B payments and small businesses. You talk a little bit about the trends that you're seeing and the behaviors, in an arguably even more important segment of the market where the volume is 2.5 to 3 times larger.
Yeah, so what's changed, right? What's changed is SMBs have really embraced digitization across their businesses. They across their businesses, whether it's for accounting, whether it's for inventory tracking, whether it's for procurement, they have really embraced digitization. Especially, it has accelerated during the pandemic with the remote and distributed workforce for a variety of reasons. SMBs have really embrace digitalization, and you're starting to see some of the innovation that we as consumers used to enjoy. SMBs are starting to see that in services, that SaaS-based services that are being offered to SMBs, and that has extended across the payment horizon as well. If you think about 10 years ago, as you mentioned, Stewart, earlier, 70 to 80% of all payments used to be check or cash based. And that has really come down to about 45% of payments are check and cash based. And there's, the amount of the volume of payments distributed between check and ACH, bank-to-bank transfers, about equal at about 45 to 50% now. So SMBs have embraced digitization across all aspects of their business, and that has extended into payments, and we are starting to see more and more of that, and we see that trend continuing.
That's great, and we're gonna come back to you on the next one, because as you touch on this digitization and the changes that SMBs are embracing, There's two sides to every transaction. There's the person or the business paying for the good or service, and then there's the receiver of those funds and incentives on each side. If we think about the merchant who is dictating how I want to get paid for something, what are some of the considerations that SMBs take into account in terms of how they want to get paid for a good, in terms of which payment type I might offer?
Yeah, so SMBs are just looking to digital tools and digital platforms to run their businesses more efficiently, and so they are looking for faster, cheaper, and more efficient payments. In addition to that, they're also looking for richer data with the payments that come across, whether it is in the form of more information about the invoices, more information about the purchase orders. They're also looking for better integration with their accounting systems, whether it's SAP, whether it is QuickBooks or Sage Intacct. So they're looking for better integration with other digital platforms that they use, and they're looking for more. So as a result, in addition to more efficient payments, they're looking for value-added services that go with digitization of those payments.
That's great. Chuck, your platform, as you prefaced, is an API allowing merchants to accept many different payment types. What are the incentives that are driving merchants to start adding mobile wallets, buy now, pay later, or other digital currency types?
Yeah, so we see there are primary, I would say, two drivers for the merchant to adopt a new API offered by Citcon to accept a broader range of the payments instead of just card-based, right? So number one is to have access to broader consumer base they want to reach. Example is, if we talk about the cross-border e-commerce, if they want to sell to Asia Pacific or cross-border, because in those countries, the traditional card penetration rate is very low. It's actually below 10% compared to the US-based, you have 80 or 90% of card-based. I mean, 90% of the consumer use just alternative payments, right? So you have to use those one. And back to the US, they are, even you have a strong card-based consumer base, but because a lot of merchants want to access some particular segment of the consumers, like a buy now, pay later, there are young generations who want to use alternative credit instrument and even like a crypto based consumer base. So they want to adopt those one. That's one to access those kind of consumer segment, right? So that's number one. I mean, number two is the merchant have an incentive to use those kind of mobile payment is because of the cost and the better fraud control, because they're mobile, give you much better, magnitude better fraud control and the lower cost of the acceptance. Because right now, a lot of merchants pay anywhere between like 2%, 3%, even some cross-border cases, 5% of the processing fee. That's very high. And in the meantime, the card-based, like a plastic card-based fraud rate is pretty high as well.
Okay, great. And Todd, how about from your perspective? What are the drivers for account-to-account payments or alternative payment methods that you're seeing?
Well, we're a little unique in Europe in that first there was a regulation called PSD2 that is making account-to-account payments much more accessible. So PSD2 has mandated every single bank in Europe to provide APIs to expose data and payments. So banks are having to make these available, but just because there's a regulation on banks, it's not enough to make merchants adopt. So merchants care about cost, conversion, and reach. And as I said in my opening remarks, they've been willing to pay really high costs for card and wallets because the reach is much better and the conversion was really unsurpassed. So what's really now driving the merchant adoption of account-to-account payments is, yes, it's much lower cost than accepting a card. And what most people don't know is wallets are actually the most expensive form of payment. But other benefits is they're instant payments, so it settles immediately into the bank account of the merchant. But again, that alone wouldn't be enough. So what's really driving the adoption of the conversion rates? We're seeing conversion rates far in excess of those that you can get on a card. And the reach now is really unsurpassed. So you can now reach anyone with a bank account. Token provides a service in 16 different countries in Europe, expanding to 28 eventually. And any individual with a bank account can simply leverage this as a means to pay without signing up for a wallet, without signing up for a card. So yes, there's some regulatory tailwinds, but you've got to solve those three major things that merchants care about. And we're now seeing these payments mature to a place where we are solving those, and we are seeing some pretty significant uptake.
That's great. So, if I can, play back some of the things that I'm hearing is, merchants care about cost, care about fraud, and mostly care about conversion rate, and creating a seamless experience, a frictionless experience for consumers. So let's look now at the consumer side. So, I think in the U.S. we're accustomed to paying by card. There's a points or a cashback system that's been drilled under our brains over the years. But outside of the U.S., maybe credit's less prevalent. What are some of the reasons that consumers are starting to adopt these new digital methods? Todd, maybe you can start on this one. What has been the driver of consumers shifting off card or cash methods towards some of these new digital payment types?
Well, and consumers look, for friction and security. And so what's really driving this uptake of account-to-account payments by consumers is first, it's really intuitive. So authorizing a payment from my bank literally is the same as logging into mobile banking, which we all do probably every single day. So it's very intuitive. The second is that the experience is really good. So very low friction. Instead of choosing pay by card or checkout with card, I choose pay by bank. I simply select my bank, authenticate to my bank. Typically, it's biometrically the same way you log in your mobile banking, and the payment goes through. So there's no typing in of card details, no data entry of any kind. And the third is it's really secure. So, my card numbers aren't sitting out there on file, becoming this potential single point of mass breach. And I also authenticate directly to my bank. So unlike some of the aggregators in the US, like Plaid and MX and Yodlee and others that actually act as intermediaries and hold my bank credentials, I'm authenticating directly to the bank. And so I'm not sharing those credentials with anybody else. So that's reasons that consumers are adopting. But now let's talk a little bit about the catalyst. What's really getting mass adoption of this? And the catalyst is topping up of all the wallets we now have. So, all of us probably have 5 to 10 payment wallets, challenger banks, crypto wallets, and all of those need to move money in from your traditional banks into those banks. And at least 50% of all wallets in the UK now offer an open banking transfer as a means of topping up. And this is certainly the most convenient and the cheapest way for the app to top up the funds, but it's really conditioning consumers to use this as a payment method. So that's really what's driving consumer adoption, and that's really what's catalyzing and driving the change in consumer behavior.
Great. And Chuck, how about from your perspective?
Yeah, from our observation, the consumer worldwide choose largely increasingly choose to use mobile instead of other means to pay. Again, it's just for two reasons. Number one is for convenience. I think a mobile, particularly for the young generations, regardless in Asia Pacific or South America or Latin America or in the US, the young generations just stick to the mobile, more easily, and they just assume a lot of things can happen with their mobile. So that's the reason you got to see a strong adoption with like a traditional, like a mobile-based fintech or financial services like PayPal or Square Cash, or some new generation like a buy now, pay later, or cryptos, all manifest in a mobile. That's provided very convenient for them to access those kind of financial services, including payments. So that's number one. Number two is, again, is about the security, because even in the US, even fraud, the security was largely handled by the merchant side, but still the consumer care about the security. I mean, mobile provide a very strong security compared to a plastic card, right? So for two reasons, essentially convenience and security.
Yeah, I think that adequately summarizes, what consumers most care about. Raj, and then lastly from you, and then, I'll remind the audience, feel free to post any questions. I have a few that have come through, so I'll try to weave those in the time we have allotted. But, Raj, from the business that's paying, what do they care about? What are the considerations as a small business that I need to manage, and why I would pay with methods other than check or cash?
Yeah, so earlier we talked about the vendors. This is the other side of the transaction. What are the buyers? What are the buyers looking for? Buyers are looking for a variety of choice of payments. They want to be able to pay by bank transfers, cards, international wire transfers, whatever. That's primarily driven by their desire to simplify their payment flow. They want an ability to use in a simple way all of their vendors using any method that the vendor desires, whatever the vendor's choice is as a payment instrument. What the buyers are also looking for more value-added services around their payment flows. For example, workflow automation. If you think about a buyer, if it's as buyers are digitizing, as they're moving away from their paper-based processes, they're looking for more workflow automation. If you think about just a simple act of making a bill payment for a SMB, they receive invoices either paper-based or via email through a PDF. Those invoices have to be processed. They have to be routed for approvals. They get approved by 2, 3, 4 people in the organization. Then finally, once they're approved, the payment is the tip of that process. The payment gets made in whatever way that it has to be paid, and then the entire transaction has to be reconciled with the accounting system. And that's a pretty complicated, paper-based workflow automation. Workflow, and buyers are looking for workflow automation which incorporates payments as part of that. Similarly, they're looking for other processes, things like treasury services, spend management, working capital, credit for really smaller businesses, credit builder type of services, which are included with their payment services. So that's really what SMBs are looking for. It's a somewhat more complicated environment than consumers.
Yeah, I think those are great points. I think when people think about business payments, they forget about the underlying complexity from invoicing to approvals, and then just the difficulty of managing your business in terms of cash flow and economics. So all great perspectives. And a quick follow-up to you, Raj, from one of the audience questions. I think if I can summarize this question, quickly, there oftentimes is consumerization of trends that we've seen in B2C applications, potentially weaving their way into B2B. Do we see more B2B payments kind of mirroring what we see in consumer payments, or will it continue to be somewhat bifurcated given the complexity that you kind of touched on?
Yeah, absolutely. That's a great point. So far, consumers have been getting the innovation love, so to speak, and SMBs haven't seen the advantage of some of that innovation. Partly it's because SMBs have been slow to digitize their processes, to digitize their workflow, and as they start to do that, you will start to see some of the same innovation, whether it's digital payments and some of the innovations that you're seeing on the consumer side on the SMB side, whether it's buy now, pay later, access to working capital at the time of purchase, whether it is treasury management services, so some of these innovative services that you see on the consumer side, you're going to start to see that on the business side as well.
That's great. Well, we are coming up on time, so I want to give our panelists a chance to answer this last question. And let's zoom into the future, 10 to 20 years. Who will be the winners in payments, and how will payments evolve? Am I going to have a wallet that I'm using in the future, or what will that look like? So, Todd, I'll do jump ball. Todd or Chuck, which of you would like to start?
Sure, I'll take it. So I'll talk in a minute about how will the payment instruments evolve. But basically, I think they're going to evolve along three ways. So it's going to continue, from physical to digital, from high friction to low friction, and from high cost to low cost. But the basic payment instruments underlying these evolutions, I believe, are going to remain unchanged. So we're always going to have the need for a currency or a bearer instrument. And what I mean by that is where the value is in the asset itself. So there's always going to be cash or the digital equivalent of cash. We're always going to have a need for a credit instrument. So a credit card will likely change along those three trends that I mentioned and be replaced by buy now, pay later, or other forms of credit. And we also we're always going to have a use for a debit instrument. So, checks were the precursor to this. Then came debit cards, where it moved money from your bank account. You will be doing payments from stored value wallets or account to account payments directly from a bank account. So I think the winners are going to be those that add value and evolve these payment experiences to be, most convenient and secure for consumers, that provide the highest conversion, the broadest reach, and the lowest cost for merchants, and ultimately provide the greatest value for the consumer.
Great. Chuck, from your perspective, and then we'll wrap with Raj's.
Sure. Yeah. So I would say, in the next decade, the clear winner will be consumer and mobile. First, I think a consumer will just have far more choice to choose their way to pay, right? So anywhere between just card or from buy now, pay later, or crypto, or some other mobile wallets, or alternative payments, all different fashions. They just have a lot of a choice. And the merchant just need to embrace that, right? So secondly, I think the mobile driving a lot of innovations still just get started. I mean, and we see a greater trend. If you look at in the Chinese market as a leading indicator, Alipay, WeChat Pay get started back in 2015. In just short 7 years, they pretty much overtaken more than half of the consumer payment, all switched to software-based mobile. And we see that trend already started in Asia Pacific, and then right now is around like 10% or 20%. And the US is still pretty low, but we see that kind of trend will continue in the next decade. We are still in the beginning of this kind of a mobile-based changing payment landscape. So in summary, I would say, consumer will win and the mobile will win for the future of payments.
Great, thank you. And Raj.
Yeah, so in the SMB space, what do we see in the next, 5, 10 years and longer? Of course, payments will start to get to be, faster, cheaper, more secure. But I think what more importantly, payments will stop being just a discrete exchange of value between buyers and vendors. Payments will continue to be more and more be integrated with the entire sort of purchase to pay journey between buyers and vendors. And what does that really mean for payment services providers? Payment service providers will have to evolve their revenue model so that it's not purely transaction-based revenue. It's going to be so they are more, sort of tightly integrated with the commerce ecosystem, and they're providing more value-based services.
Well, with that, I want to thank you, the three of you, for joining us today. I know our audience, was very interested to hear different perspectives, both on the consumer and the business side. So thank you for joining today. And you guys are welcome to drop off. I'm going to leave with our legal disclaimer on the way out. So if everybody would quickly review on their way out, and thank you again for joining, and I hope everyone has a great rest of the day.